In money matters, the JSE is weaker along with its global peers as investors digest the move by the Federal Reserve to raise interest rates amid the global banking sector concerns. Sanlam Investments analyst Carmen Mpelwane is standing by to help us dissect the latest market moves. A happy Friday to you, Carmen. So it looks like the rand is in a similar mood. Is it over its weakness trend?
That is the all-important question. We are seeing some strengthening today. As you've mentioned, Dudu, post the Fed announcement and the marginal increase of 25 bips, seems that the Fed comments have also given the market some solace or some confirmation at least that this is likely close to the peak. Initially, market was looking for a peak in the US closer to 6%, but it looks like that might be tempered. I think despite the fact that there has been a banking crisis in the US over the last 2-3 weeks, this has given some support in terms of what the Fed has been doing, trying to temper inflation and rein in interest rates. So I think that has helped them to the detriment of the banks, but this seems to have given the ZAR some boost on the back of some confidence in the rest of the market.
So since the advent of load shedding some 15 years ago, South Africa has experienced its worst year of power supply last year, with the number of power outage hours soaring 300% compared to the year before. And that's according to a new report by the African Energy Chambers. Talk us through that finding.
There are very concerning numbers that we've seen come through. They touched on the fact that there's been 205 days of any stage of load shedding in 2022, and that translates to about 56% of the days that we did have load shedding. Unfortunately, if you look at the last 17 years since we've seen the start of load shedding, the guidance is that we've had about 17% haircut of what we could have seen the economy grow at over these last 17 years, which again is very disconcerting. But we did see that follow through in the numbers towards the end of 2022. So the last quarter, we did see the GDP detract 1.3%. So not too much of a shock, but I think definitely a shock in terms of the magnitude and the potential that's been lost over the last few years.
Yeah, that didn't stop people from picking up their favorite outfits. Retail-focused, resilient recorded retail sales growth of 9.4% for the period ended December. Talk us through their performance.
Yeah, so it looks off the back of it resilient numbers, excuse the pun. What it does show is that number one, they've distributed all of their earnings. They did raise concern around the latest acquisition of Hammerson, which did not declare a dividend in the second half of the year, and that has therefore tempered the dividend that they have declared. Having said that, despite there being a marginal decline of just over 3% of this dividend, they did give it a solace in terms of the fact that they did distribute those lighthouse shares. Had they not done so, we would have been able to see an increase of about 3.8%. Market neither here nor there at the moment. The share price not reacting too positively.
Okay, Toshiba Corp's board has accepted a $15.2 billion buyout offer. What was on the table? That offer you cannot refuse?
So it is coming from a consortium of about 20 Japanese companies, and I think that was quite important for the business, and I think the Japanese in general, that the company will stay within control of a Japanese entity. Having said that, we know that we've seen Toshiba under lots of pressure over the last few years. There's been some financial irregularities, some accounting issues, and we've also seen some fallout related to their nuclear power interests as well. So they have been looking to restructure. This seems to be part of that. So this bid has come through. The board has given their, I wouldn't say an approval, they have given their support without actually giving a recommendation, which is partially unusual. But they have said or tried to relay fears and say that this process is likely to take 4 months. They don't want to put their stake in the ground. They don't know what could happen over the next 4 months, but tempted to say that it's likely macroeconomic factors more than anything else that they expect.
Carmen Mpelwane, Sanlam Investments analyst, thank you very much for your time this